Hey, fellas, look what I found in my pocket. Look, a year's salary right here. That's what I call them? Fun coupons. See that? A fun coupon. On the sloop, John B. Grandfather and me.
What is going on YouTube? It's Brendan from Market Makers. Happy post-insurrection day. It is hot here. It is so hot. The heat index is like over 100 in my part of Florida. It's absolutely insane. But I hope everybody had a fun insurrection day. I had some veteran friends over. We grilled up some watermelon, grilled up some steaks. My dad actually was here. He's a veteran as well. And we blew up some tannerite on the ranch. Those of you that know that that's both explosive and very fun. So it was a good day. And it made me wonder, did Hunter visit his dad in the White House? So to find the answer to that, I had Lee scour the news. Lee, throw up the Forbes article from Forbes, guys. Boom. Look what was found in the White House. That answers the question. Hunter visited his dad in the White House. But on a serious note, guys, this video is going to focus on the S&P, the broader equity market, as well as Bitcoin, the broader measure of the crypto market. Next video, we'll go over all the different assets, but I want to show you what's happening. We're going to look at some wave projections. This is key to understand what's happening in the marketplace. And I want to share some polling data with you. Lee, throw up that first Gallup poll. This is a brand new Gallup poll that came out last week. How would you rate economic conditions in the country today? Excellent, 1%. Who the hell is rating the economy excellent? That must literally be the top 1%. The people on their yachts that have their nannies taking care of their kids, their butlers doing the grocery shopping and getting their cars fixed. No idea what prices are because prices are insane at the grocery store. I can tell you that. Good, 18%. Again, these are clueless people. Fair. These are people who have no idea what's going on. 37%. Poor. 44%. So the poor to the good ratio is 2 to 1, more than 2 to 1. More than 2 out of 3 Americans think the economic conditions in the country are poor. This coincides with Biden's lowest approval rating in presidential history at this point in his term. The worst approval rating in presidential history. Go to the next Gallup poll, Lee. Do you think that economic conditions in the country as a whole are getting better? Getting better, 27%. These would be the people watching CNBC and CNN. These are the super perma bullish people that don't understand economic cycles or indicators, and it's reflected in the stock market. Getting worse. 66%. So 2/3 of Americans believe the economy is getting worse. This would coincide with the fact that 75% of the economy is driven by the middle class. These are people that own restaurants, lawn care businesses, small businesses, work from home people, white collar people. All these different people know that things are getting worse, but you don't see it translate into the equity prices. Why is that? There's a bunch of reasons for that. The small handful of it is a lot of big money missed the rally. They're chasing it, okay? Retail is wrong all the time. 80% of retail gets liquidated within 90 days of opening an account. So this is why you have this disconnect in reality of the stock market versus the reality of the economic indicators. Lee, throw up the yield curve inversion. Guys, look at this. 3-month, 10-year. Right now, the whole yield curve, by the way, is inverted. The whole yield curve. This is the worst inversion going back to 1961. So let's just back it up a little bit. The GFC, we have a worse inversion than the GFC where the S&P dropped 50%. We have a worse yield curve inversion than .com, as you can see on the chart, than .com where the S&P dropped 50%, then NASDAQ dropped 84%. Worse than early 1980s when Volcker jacked rates to 20%, multiple sell-offs in that market. Worse than 1972 bubble, where the S&P had the largest break since 1929 ever, where it fell 67%. By the way, it had 265+% rallies in that bear market as well. Understand the facts, guys. I know it takes patience, but also understand the difference between trading and the difference between forecasting. We long and short on our Discord. You guys can check it out. A lot of people are in a Bitcoin long right now from the support that I was sharing on the top of the ceiling of Wyckoff. One of our traders posted a long, and that's a 27% move. That's after our 20% short on the market as well in Bitcoin. And we just had a successful short on the S&P. What I'm doing is trading the bear markets, guys. When I'm investing is when we make a new low. A new low, actually the market bottom is where I want to invest because we're still going to have another low coming in. We're going to talk about that right here on the wave projections. But we have all types of people on the Discord. We have people that are just patiently waiting, people that are learning TA, and you get a lot of education, you get trade signals, everything all included, and it is free for your first month. If you want to try out SimpleFX, try out BingX, they will pay for your first month. All that details in the video description. If you have a problem joining, you have a problem with an exchange, you can't figure something out, message Lee in the Telegram in the video description. Let's get into this, guys. Last video, we talked about the Elites trend line. This is the monthly on the S&P, and this is in log scale, okay? Goes all the way back. Let me squish this so you can see this. All the way back to 1987 crash. Couple of key components here. Looking at this. This is your bottom. You found the bottom of your sell-off from .com on the trend line. Notice it did take you 7 years to barely take out that all-time high, and then you crashed in the GFC right down through the trend line. Government stimulus, 0% rates, gave you this massive pump up. Pandemic, again, retested the trend line, fell back down, and then again, government stimulus, trillions upon trillions, pumped you up for an elongated wave 5. Couple key concepts. Once again, guys, the market has never bottomed ahead of a recession. The yield curve tells you a recession is guaranteed, 97% probability you're going to get a recession. That means your 3,500 bottom, 3,550, whatever it was, is not going to be the bottom. Something else to note here on the Elites trend line, you are testing the trend line right now at the price action. This is why it's so important to separate, again, probabilities when you're looking at forecasting of upside and downside versus investing. Because investing, this is a very expensive market. I would not invest in this market right now. Trade it? Sure. That's what I'm doing. And let's go ahead and look at this. All right. So my wave count. Wave 1 came off of the .com low. Wave 1, wave 2, elongated, wave 3 here, wave 4, wave 5. I use Confluence for my harmonic cycle wave counts, guys. These are vibration waves, and we can get into that in other videos. Working on a long education course that we'll be offering on the Discord as well. But that's in the process. But this is something you guys need to understand. Harmonic cycles happen in moves of 5. You have the law of 3, your ABC corrections, your double tops, 3 major moves, just like you have on a 3 candlestick reversal, 3 rising valleys, 3 falling peaks, all types of moves that happens in 5s and 3s. But a harmonic cycle is a completion of 5 moves. Now we're testing the trend line, but something I want to show you here because, again, the 3 move would be your larger ABC. And again, this is a major degree that we're talking about because we're on the monthly time frame, but market symmetry is one way that I look for confluence for waves. I use waves for market structure, not for trades. Okay, this is just market structure the same way I use Wyckoff. But if you look at your sell-off, peak to trough, you're looking at 27.5% move. If you look at your rally, trough to peak, you're looking at a 27.69% move. Market symmetry. So to me, what this is saying is this is an ABC move that's happening here on the monthly time frame. Let's look at this. So here's your A, and now you're working on your B. Where can that B get to? That's the $1,000,000 question. How accurate are your waves? Whether you're using Elliott wave theory, whether you're using harmonic cycles like I am, well, my wave hit the 2618. Fibonacci proportions are extremely important. 48.29 to the dollar, okay? Hit the 2618. Testing this trend line. So this is my wave 5, and you have the A, B looking for a C, and I can get the projection of where that C would be. So let's go ahead and use this. This is my trend-based fib. Go ahead and do this. Coming up. 31.31 is your target for this reciprocal move, your impulse down, okay? Let me show you this, how we can track this using an ABCD tool. This is very simple, yet very important. So assuming this price stays where it is now, this is the same price target I've been giving you literally for months, guys. 31.31. We have the 734. This is basically a 707 and a one spot 414 harmonic reciprocal ratios. I've been saying 3100 to 3400 is your next move down. Let's remove some of this. You can see this a little bit better. And if you look at this again with the ABC pattern here of a correction, this would be your A. This would be your B. And then your C is going to come down here. We're going to look at the pivot pattern and everything as well when you look at this. So here's your C, 31.31. What you have forming, guys, is a gigantic double top on a monthly time frame wherever this fails. Okay, this is what you have forming. This will be your breakdown to 31.31. Again, the market never bottoming before a recession. So where this peters out and turns down, this is what I expect to happen in the marketplace. Now, when I was looking at this as well, you have this larger ABC on the monthly, but looking at the different factors, my different confluence factors for how I count waves, I really felt on a smaller time frame, we're going to look at this on the daily, that this pivot coming out of the pandemic crash would have been a new series of waves. Okay, this is what I felt because this is an elongated wave 5. It has too much momentum. And I was looking at this and this test to see if I was right. I mean, I can simply just test my waves. And I had a completion of the 1618 on top of the 2618. Again, target hit perfectly for my Fibonacci proportionality of a harmonic cycle, a 5-wave move. So I really do think this would have been a whole new wave count. And that's what we're going to look at here on the daily time frame. Let's go ahead and go to the daily time frame. I know a lot of this may be over some people's heads, but I know a lot of people track waves. I know a lot of people look for confluence or disagreement, and that's totally fine. Waves are subjective. Again, I use them for market structure. This is my methodology of how I do this, but it's really important to see, guys. So here's the pandemic. Okay, we're on the daily time frame. And again, when we look at my target projection on a non-log chart, this is linear, you can see 44.59. That's where price is hitting right now. You have two rejections at 44.59. Now, if I throw this on a log chart, you can see our wave 5 up here. You throw this on a log chart, and we can get logarithmic and 1618, 4884. You can see how close we got to this. And if I want to be really particular and nail the impulse move, which would be the actual move up here for that first wave, this thing would come and be right on top of the actual move here in the charts. You can see this. Look at that hit. 48.25, okay? And that's using the actual impulse move. And that puts you down here. If you switch this back, take it back to linear, this will put you right back to 44.32. So now it's a 20-point difference is what you're looking at. It's 27-point difference. And so this is now where price is finding support. So it's really interesting, and it really matters if you understand impulse moves in Fibonacci, where you measure from. Most people just take extreme lows to extreme highs, but you actually want to look at the wave. You look at the wave, you nailed it to the dollar. If you just use the extreme low of the pandemic, you miss it by $25. Does it matter? I mean, it can. It depends what time frame you're trading on. But let's look at this. So wave count up, guys. Wave 1 out of the pandemic. And again, everything happens harmonically in 5-wave cycles. Law of 3, the Gann marketplace pattern, very prevalent as well. But if we look at this, do we have a 5-wave move in here for this reversal? And the answer is yes, if I can get this mouse to work. Hold on, let's expand it. Here's you go. Up, down. Here's your D. Here's your E. Here's your 5 waves out. Okay, 5 waves out, broke out, wave 3. Wave 3, you come to Wyckoff in wave 4. Do we have a 5-wave out in wave 4? And the answer is yes as well. If you look at this, you're always going to find 5s and 3s everywhere when you're looking at these structures, okay? So you look at this, here's your 5 waves, wave out. Now you have your wave 5 topping pattern. Again, nothing more than Wyckoff, guys. You can put this in Wyckoff. You can learn these concepts, but you can put this in Wyckoff as well as you can count waves. Trackball is not working very well today, guys. I'm sorry for that. But You can put this in Wyckoff, establish a trading range as well, but you can also just simply count your waves when you're looking at this going backwards. Very easy to do, obviously, because you know where the peaks and the valleys are. So here's your 5-wave move, getting your up thrust and down thrust. And here's your up thrust. There's your E, and then there's your sell-off. Okay, you see that? So it's just, you have your wave 2 was a 5-wave move, your wave 4 was a 5-wave move, your wave 5 was a topping pattern with, again, a 5-wave move. Now, in that larger time frame here on the S&P, again, we're looking for that ABC, which is your double top pattern, your ABC. So that's the larger degree. But you can also see, you can just count wave 5 waves down as well. And again, you can do this with confluence, but you're counting your waves down. Your first wave, second wave, third wave, fourth wave, fifth wave, okay? So you have these confluence for your waves. Here's your A from your monthly time frame, your larger degree time frame, and your B wave up here. And now we have a 5-wave move, as you can see. We have a 5-wave move here for your B wave. So 5-wave, B wave, and then we're looking for that C wave down. And we have our target here from the 44.32 or 44.59. I would mark them both off. That's where you have resistance right now. Can this rally any higher? When you look back at the monthly time frame, you're right at the trend line. But can it rally higher? Yeah, it's just a trend line. It's not magic, right? You can rally above it. What's a probability target here for a stronger rally? This is also easy to get. I can use Fibonacci if you understand Fibonacci impulses and projections, and I get 45.44, okay? 45.44 would be my next level up if we decide to rally up from this level. We're at 45.54. Again, a 90-point move up. This could happen with the data this week that could start a little rally to get up 100 points. But I'm still looking for the topping pattern for the B wave, for that larger wave down. And by the way, when you lay out your fibs correctly using impulse moves from the pandemic low, notice something here on the daily chart. What's their bottom? What's your one fib? 35.88. Where did the market find its support on that A move? Found it right there at 35.88. Again, my theory, this is the B wave. C wave, the impulse wave is coming, and that's going to be the big market drop. So if we look at this again from the pivot pattern standpoint, let's go ahead and do this. Open the pivot pattern up. You can see I kept the 44.59 in here because it's easier to see this. And here's your 5-wave count of your B wave. We hit our pivot. We took this trade, a nice 100+ bar descent here. And now you're hitting your head at that 44.59 price, currently at 44.52. The next pivot is due August 14th. How could this play out? Well, this was a pivot. You got a pivot. Wasn't a big drop. Remember, market symmetry, these were 9% drops that we traded. 9% moves. These are great trades. Share these on the Discord, share these on YouTube as they present themselves. But this is where you are now. And right now, you're trying to trade at the top of your Wyckoff range, which is quite simply right here. You basically established your Wyckoff range. This is a daily time frame. I would say it's like this because you have an up bar. Doesn't matter. But we're looking at this. You're at the top of your Wyckoff range, 44.59, and you want to break out above that, flip that, and move up. And that's how you will get to that 45.44 if you do. So you have the pivot. If you do fail up here, if you just hold here and go sideways, you have yet another key pivot in August, okay? And then we start approaching that fall equinox there, late September. Early October is yet another pivot. So could have a move to 45.44, looking for a topping pattern, will probably be some type of 5-wave pattern or a 3-wave pattern, and then the descent. That could happen on this next pivot on August 14th, or you could see the breakdown before that. Again, what's the purpose of the pivot pattern? That's all over YouTube and Twitter now. It gives you fantastic trades and moves in the market, nailing tops and bottoms all along the way. Sometimes they're disappointing, like this pivot. We had a couple nice 100-bar drops. That was it. And then we had this nice move up and had another 100+ bar drop for that last trade. This is a key area here in the pattern. It's a key area for the market. The data that comes out is going to dictate, I do believe, at least a short-term trend, what's going to happen in the market. The impulse back up for an elongated wave 5 45 to 45.44, or to move back down. This is your topping pattern and begin that C wave. Okay. And again, even on the daily, as you can see, you have a massive double top if this thing fails. Okay. So you have to watch that. On a monthly, huge double top. Huge double top with the symmetrical move taking you to 31.31, even market symmetry in the price. Very, very interesting to me. What's this look like on the 1 hour? Do a lot of trading on the 1 hour. I zoom in, maybe even the 15-minute. But, just looking at this, we had a little bit of a sell-off, a little bit of a buyback up. Market's waiting for the data. Once again, there's your 44.59, okay, for your 1618 projection. You hit it, fell below it, trying to come back up into it. Market is waiting for this data. It's interesting to see how the market participants will receive the data, the payroll data, everything else. But you're going to see the market move up to that target, or you're going to see it start to fall apart. Checking out Bitcoin, guys, jumping over here. Bitcoin bull case, went over this last couple of videos. Looking again, geometric concepts, market symmetry, 63%, 58%. The geometric mean of those two waves would give you 61%, which again, on a Fibonacci projection, would be the expansion ratio 2618 at 39,791. If the S&P decides to move up, if it decides to move up to that 45.44, you could at least expect, if Bitcoin follows suit, which I think it would, the move to 34,770, potentially a blow off at 39,791 when it tops out. The S&P tops out. I would expect it to fall apart. And again, if the S&P starts falling apart, this may be your move where you are. You got up to the 31K range. You can see how accurate the 1618 is at 30,825. Zero candle closes above it, going all the way back to April 2023. Okay. Again, understanding harmonic wave projections, very important for looking at probability targets. And you can see this here on the 3-day chart. This would have looked nothing more than grabbing my impulses and doing this. The current layout here in the wave projections. And we're looking for this wave 5. This wave 5 comes up to the 2618, or this wave 5 tops out here at one of these ratios like where it is now. That will all depend on what happens with the S&P, because again, all you have here is a double top pattern that's already formed, just like the S&P, just like everything else. This is why it's a critical turning point. You get critical turning points often in the market, but this is just a dragon pattern, a double top type pattern that formed, and you can see the market, if they do roll, you're going to see Bitcoin roll and complete this leg, okay? And then you have this massive double top. And when that breaks down, you will have further down targets. Again, this won't be your low long term, guys. Now, again, you can trade it between now and then. Trade at this pump in the room. We trade at this short in the room. 20% drop, 20%, 26% up. This is how you can profit in the bear market, understanding probabilities and where price can go. If we look at this on the daily time frame, again, the 30,823, you can see the prices up here. You're just trading in this very narrow band here, even on the daily time frame. Looking at the paper in the market, you're coming back down to your median line. Momentum's still good. You still have good momentum, but there's paper leaving the market. Hence, you're at a top right now, and it's just waiting. You're just waiting to see what happens in the marketplace. Let's switch this over to the 4-hour. 4-hour, you can see it even more condensed. You have paper leaving the market, momentum switching over, but you can see the elongation here of your Wyckoff trading range. This is all you have is a very tight, and mark the bottom here, getting down thrust, pumps back up, gets up thrust, falls back down. Very tight trading range. Again, my opinion, market's waiting for that new data to come out. Guys, join us next time for the next video. Being this is a holiday week, my next video will be Monday. We'll cover all the different assets. I have friends in town and family in town, so I'm going to enjoy this week. I hope all of you have a great trading week. Watch all the data dumps coming out in the marketplace. It will affect your levels. Consider checking out our room and supporting the channel. Would love to see you guys in the room. Contact Lee with any questions. Take care, everybody.